and we're live, everybody. Welcome to another edition of the Investing Across Borders show. We are here. My name is Miri Lenov. I'm with Shama, and our special guest today is Michal from Lendai. She's the head of the Canadian arm of Lendai. So we have an amazing show, and Michal can talk for hours and hours on this topic. So we're gonna get right to it. So Michal is gonna talk about inflation, the correction period, financing options that are available, believe it or not, for foreign nationals, um, the interest rates, the difference in mortgages between the US and Canada, and benefits of investing even now, even though things are going crazy. This is really a good time to invest. So, Michal, thank you so much for joining us. Thank you for being here, and let's get right to it.
Let's get it on. So, thank you. First of all, thank you for having me. Thank you for the opportunity. I'm here in my Toronto office, and I'm gonna introduce Lendai to whoever still doesn't know. Lendai is a U.S. private lender financing foreigners only investing in the U.S. And so currently from 5 offices around the world, we're servicing around 10 origin countries, 10 to 15 origin countries, mainly Canada, the UK, Western European countries, Israel, Australia, New Zealand, and there are a lot of foreign nationals that are looking into the US, and that's because of obvious reasons, especially for Canadians, the Canadian or the Torontonian bubble, and what happened during the last few years in the real estate in Ontario and Canada, Vancouver, that just didn't make sense, at some places and specific areas. And so we see more and more Canadians looking south of the border, transferring Canadian portfolio down south and making that move. So a little bit about making that move as a foreign national. We are providing business-to-business loans for a non-occupied owner. So that would be rental investments only. And the way to do it is that the US or the foreign investor will have to open the US entity. So this is something that you guys are helping with. We worked on a few clients together, and it has been a success. And so it could be a C Corp or S Corp, LLC, and LP. So I think most of our clients know that an LLC wouldn't be a pass-through or a see-through vehicle into the States. And that's why most of the cases we see a double entity under a Canadian holding company, and that is bringing the structure more complex, let's say, something that conventional banks, the big banks we know, RBC, TD, and others, they're not crazy about that complex structure. And so we're not going to talk in more depth about the structure because I'm not a CPA, and I do recommend to consult with a CPA and consult with anyone who can give a legal advice, as you guys give. But at the end of the day, we need that U.S. entity established in the U.S., and that's where we're gonna go. So that U.S. entity will directly own the property, and then we provide a DSCR loans, and that means debt service coverage ratio. So we're gonna look at the property, and this is actually relates to the algorithm that Lendai built Lendai is a fintech company, financial technology based. Everything is online, everything from the comfort of your home, including closing. And so that technology enables us to evaluate the property in the US. So we're going to look at the rental income, and then we're going to deduct the principal, the interest, the tax, the insurance, and the property management. And then that's going to create a positive, we want to see a positive cash flow. And that's where we're going to give the best leverage we can give. And so
Right.
on the other side of the foreign national, for Canadians, it's a little bit easier. But think about the German, the Australian, the Swiss guy that wants to invest in the US. Now we're going to go into those foreign countries and we're going to assess the foreign national investor in his origin country. So we're going to look at his, if it's Canadian, we're going to look at his Canadian credit report. We're going to look at his income and liquidity. And we're going to verify 2 pieces of ID. So as simple as that, we're going to assess the foreign national in the origin country. We're going to look at the DSCR of the property. Our technology enables us to do that in a very short period of time. Excuse me, unlike a conventional bank where things takes forever, especially if it's more complicated. The seasoned investor with few corporations, double or triple entities are separating between the property and the individual on top. That's where we're going to shine. That's where we're going to go in. We're going to go in our system. So the client is getting a client's portal. Everything is online. He's going to upload all the documents over there. He's going to see in a very transparent way the process. And then once everything goes well, meaning we sent the appraisal, the property came back clean of liens and whatnot, we're going to move to underwriting. And from underwriting, we're going to go to e-closing. So we use online notaries. A representative of Lenda is going on that meeting as a witness. We have the client, we have the notary. And I actually, not long ago, I've closed a deal where the investor was on the top of Mount Tremblant on a ski.
Wow.
Skiing, and I go, you remember we have our closing at 2 p.m. He goes, oh my God, will I be able to make it? Will I be able to do it? And I'm like, yeah, of course. You can take it from from anywhere in the world. We had a Canadian closing a deal from Milan in Italy. So all you need is a good Wi-Fi, and there you go. That's how a foreign investor can invest in the U.S., the U.S. property, a cross-border transaction with no issues.
That's awesome.
And that's what we do. That's the main vision that we've seen in the beginning, and we see it come to fruition today, where it actually works. It's doable, and yeah.
That's awesome. Yeah. So pretty much when we work with clients and we send people over to Lendai a lot, is they come to us, they say they want to invest in the US. They might not necessarily want a visa at the moment, but they do want the benefit of getting good rates for their investment.
Right.
So we typically tell them, okay, this is the package that we have to offer you, making sure that your assets are protected, and that we can help you to make sure that the entities that you are setting up is the right way to do it. And then the biggest thing is avoiding double taxation and all of that other stuff that it's super important to do before you even reach people like Lendai, like Michal. And then after that, once things are taking mold and you're finding the properties and you're finding the investments, Michal is a great resource and Lendai is a great resource because they deal directly with foreign nationals. and a lot of Canadians as
The
well.
product and the process is designed, custom design, especially for the foreign national. So when you're choosing your private lender in the US, I mean, there is a lot of private lenders that's going to do a DSCR based loans, and going to assess the property. But then it comes to, a week before closing, you can get an email from your lender saying, uh, so where are we going to sign? You're going to be you have to be on a US soil to sign, right? And all of a sudden it's like, oh, I thought I found a perfect lender, but actually this lender is not focused on the foreign national or foreign national centric. And this is exactly what we are. We don't do anything else. I mean, we don't do any discrimination, and we would love to accept everybody, U.S. expat and whatnot. But at the end of the day, our product is designed for the foreign national. And according to what you said with the double taxation, one of the most common questions that I'm being asked is, why should I open my U.S. entity? Why shouldn't I go to a consumer loan under my personal name? And the simple answer to that is that we found that the best practice to look at the rental investment, especially when you're a foreign national, thousands of miles away from the property. It's not like you can just hop on your car and go unless you have, 5-6 hours driving to Detroit. That's possible, but you're very far away physically. And so we treat it as a business. For us, it's a strict business. The business is called a house, and this house has a tenant, and you hire a property manager, and you have your income and you have your expenses, and we want to minimize the liability. If something goes wrong, we don't want the foreign national or us as a lender to be exposed to anything really that can go wrong. And so we always recommend to treat it as a business, to look at it as a business. And if you want to be successful in your business, you have to hire the right people. That's another
Yeah.
very good key for a national. I mean, the boots on the ground, the people that's going to deal with your accounting, legal, property, anything at all. That's so important. When you have when you take a financing and you use the lender, it's also our due diligence. It's also another set of eyes, an expert
Right.
eyes, looking at your deal. And so if I'm let's say sending the appraiser to do the inspection, and all of a sudden I find out that we've seen everything, right? So we've seen water damage in the basement, a tree growing on the roof. Anything can happen. And so the foreign national, again, so far away. And when we invest, I can speak for myself on also the investor side,
Right.
saying sometimes I just want to invest. Sometimes I just want to put my money in a good source of investment, and I don't want to deal with it. I think about it as very passive, right? So very, I don't want to. I don't want anything to do with it. I'm going to put my money over there, and I'm going to wait until it's creating more money for me, right?
Mm-hmm.
And that's why when you take a private lender, another set of eyes, more professionals are going into the deal with you. That due diligence is very important.
Yeah, definitely. I totally agree with you. And that's why you, Michal, and us at Investing Across Borders is having that extra set of eyes, like you're saying, and making sure that it's in your best interest. Shema, did you want to add something before we go into the other topics that we said we are going to talk about?
No, I just want to put more emphasis on what you mentioned about picking the right team. It's really, really important, and it's something that we talk about with Miri constantly. It's such a sensitive thing because
Very.
when you don't, we get a lot of clients who don't, who have had a lot of time and money wasted because the selection of the team was not done properly, and that's very, very important. So, yeah.
Yeah.
Yeah, definitely. So, Michal, thank you for telling us about what Lendai does. I think people are going to be interested a lot about, we were talking about the interest rates, the difference between mortgages. I think maybe if we get into that, because we have about 16 minutes left,
Yeah.
um, that'd be
I
great.
that's plenty. So um, let's start with the differences. So the two biggest I would say two biggest differences between a Canadian mortgage to the US mortgage is the mortgage points buy down. So in a very American way, you have the opportunity to buy down your rate. So if right now we're in the mid nines, you can purchase on a one-time fee that's going to be charged at closing. You're gonna lower your rate to the mid eights, which is very competitive right now in the market. And so in Canada, you don't have these options to pay another 1 basis point, 1%, and you'll get a cheaper rate. There is no such thing. So
Mhm.
this is one big difference. We have 4 points up for grabs. And then the second difference, and I think even more crucial than that, is the fact that 60% of the mortgages in the US right now being controlled by the private lending, by the private market. And so, and another 40%, you know, using people use the the big banks, could be Chase, Bank of America. For foreign nationals, Canadians, they're going to go to the TD branch or RBC, etc. So the 60% are being using the private market, and that's where the mortgages are not staying where you purchased them from. So let's say um, Lendai is being operating as a origination machine. So we're going to originate the mortgage. We're going to fund from our own direct money, right? But then that note would keep rolling to different hands. In the
Mhm.
private mortgage world, one note can go through 5 different hands in a term of, let's say, 10 years.
Right.
So so that's something that's very different, and because on our side, on the lender side, if that's our model, and this is everybody in the non-QM private lending sector, the model is to keep rolling those to the buyers, the securitization companies. And with inflation and the current market situation, I'm not going to sugarcoat it for the audience. The market has been tighten up the rules. They want more documents, they want more due diligence. And at the end of the day, I am being obligated to stay under the rules and regulations and qualifications of those who are buying those notes from me, because this is the Lendai's model, right? And again, any other private lender. So when we're tightening up our rules and regulations, asking for more documents, that's because our buyers, securitization companies, are asking that from us, right?
Right.
So in
Yeah.
terms of, especially for foreign nationals, so in terms of KYC, know your clients, and AML, anti-money laundering, and other regulations in the US, we have to stay under those requirements if we want our business to keep rolling, right? So that's another
Right.
big difference that makes the impact all the way down to the end client. Now, in terms of rate and inflation, so we see the rates are going up. We expect another raise soon. We expect a second increase around December. And so rates are going to keep going up. And the prices we see from August of 2022, we see 0.7% decrease. So not a big decrease yet. It didn't. Some markets are different than the others. Some markets are very strong still, but we also starting to see that little decrease, right? And so the three most important key components, I would say, that are still make sense for us to still invest in real estate is, number one, lock your value now. So if we know the value, the prices are going to be going down a little bit, the talk, we see how the discussion changed between lock your rate to lock your value. So if there is a property, say, middle housing market, $200,000, and that might go down soon, we want to lock that value at $200,000, and we can still extract some of that equity. And then later on, with lower prepayment penalty, now we offer, there is always a way to change later on when interest rates do go down, maybe mid 2024, to change that from an expensive money to cheaper money. But the conversation is to lock the value and not locking the rate. The locking the rate doesn't matter anymore.
Yeah, is this kind of like refinancing?
Yes, that's exactly what it is. So we're going to refinance in 3 years, let's say.
Right.
And, or even less.
Yeah, hopefully sooner.
Yeah,
hopefully you still have the value.
Hopefully sooner. But then you locked, or at least you locked the value of your property. So that's the discussion right now. And this is number one. Number two, tax benefits. Okay, so everything, all the expenses around a U.S. mortgage, and especially business-to-business loans under a U.S. entity, all the expenses around this loan is tax deductible. And when you calculate your NOI, ROI, return on investment, and net operating income, you always have to calculate post-tax returns. Right. So expenses like the realtor, the mortgage points, third-party fees like title company and appraisal company. So all of these would be tax deductible. You're going to get it back. And if you want the most accurate number and in your bottom line, then do it post-tax returns. Number three, currency exchange. We all see the US dollar going stronger and stronger. Especially in the UK, we see British clients, it's standing on 20% down versus the US dollar. This is a big deal for them right now. So when we're looking at a US lender financing foreigners in a US dollar currency, then now, because most of those people, most of the investors are not afraid to buy all cash. In fact, the statistics is saying that most of the foreign nationals are purchasing all cash, right? Most common way is to take a HELOC on your primary residency in your country of origin, and then take that money going into a lower value market and purchase all cash. right?
Yes.
Right now, if you use 30% of that cash using 70% financing in US dollar, now you're exposing only 30% of your money to that currency exchange. That can save you tens of thousands of dollars at the end of the day. Now, with the rest of the money, you can either A, invest in another property. So now you're purchasing two instead of one. You're doubling your buying power. You're diversifying. And two, you're minimizing your exposure, enjoying that 70% US financing, US dollar financing, right? So that's the three components to consider. And still, I must say, real estate is still the most attractive way to wisely use your money and invest.
Yeah. Yeah, exactly. I mean, it's been proven time and time again, right? There's
That's
no
right.
other better asset that you can have other than, I mean, not
Not
right
with
now.
not with, if you want to protect your capital from inflation, and you go on the safest way. So if we're comparing to the stock market or to any other account in your
Yeah.
origin country, it's still the most attractive way to invest.
Yeah, and somebody said that they're not interested, don't invest. Yeah, that's people's personal opinions. I can tell you that we have a lot of clients, and even Michal maybe can attest to this, that they're investing in real estate because their goal eventually is to maybe live in the US. And by acquiring a property and building up your portfolio, it's your first step to be able to qualify for a visa, whether you want to do it through a franchise eventually, through real estate. We have a lot of different programs that people can take advantage of.
Yeah.
So if you don't want to invest, that's on you. But this is really for people who want to invest, that they see an opportunity, that they want either to live in the US or just to have a different passive way to make more money. And there's a lot of people in Canada that, and we've been having a lot of consults as of lately, and they're saying that it's very hard to buy properties right now in Canada. And these are
Oh yeah.
people that have a portfolio of properties and everything, and they want to get in right now. Is one of the best times to get in
That's
the
right.
US market. Maybe Michal, you can talk a little bit about that. We have about 3 minutes left. Why now? Why should we? What is the benefit to investing right now in the US?
I mean, all I can say is that timing the market never works. If you're going to sit on the
Hmm.
fence and wait for the right time, it's never the right time, never going to come. When the interest rates go up, the values start to decrease. When the values start to decrease, the interest rates, or the values start to increase, the interest rates goes down. So sure, you can find that sweet spot between where the interest rates goes down and the values starting to go up a little bit, but at the end of the day, you're losing the money sitting right now in your account and not working for you, right?
Yeah.
So if the money sits in the account and doesn't work for you, uh, the other or the opposite, it only has the bank fees and whatnot, and then you decide that you will gonna go, then again, when you look at the bottom line, you didn't do nothing, you just waste your time, right?
Exactly.
So
Exactly.
Yeah, that's exactly it.
why don't you dive in, take a big step, especially as a Canadian foreigner, um, going into lower market. Right now Canada is still, I mean, we see the decrease, that's fine, but still very high. You can go into the lower markets, Michigan, Alabama,
Hmm.
Ohio, um, Tennessee, and then
Yeah.
sit over there 5 years, cash out in 5 years, and you will come back up north in a better position. So if you are planning to go into your Canadian real estate, that's fine. But I think into terms of accelerating the process, go south of the border, invest, go out in 5 years, 6, 7 years, and go back home with a way better position to qualify for the mortgage you want, to buy the property you want, right? We see a lot of young couples do that.
Yeah,
You know?
definitely.
So yeah, we talked about the benefits. We talked about what's going to happen to the market. We talked about how Lendai can accommodate mortgages for especially foreign nationals, and how we designed our product for that. And I invite all of our audience and whoever is listening to reach you guys and
So we're gonna
what you do.
we're gonna drop the links in case anybody wants to get in touch with you, Michal. This is amazing. Somebody said you miss 100% of the shots you don't take, and that's exactly right. This is really a great time to invest. When people make the most money, when people are worried about what's going to happen, and that's when other people come in and they say, okay, this is the perfect time for me to invest, to get this going. So we're out of time, but this has been amazing. Michal, thank you for taking the time to join us today. Shama, did you want to add anything else?
No, it was perfect. I was again thank you, Michal, for being here. Michal, I'm sorry.
Thank you. Thank you for having me. Thank you for another fun day at work. I appreciate that.
Yeah, of course. And we'll, of course, have you back for another live at some point, I'm sure.
Yeah.
Another event. So if anybody has any questions, we'll be monitoring it wherever you're watching. And thank you again. We'll be back next week. And we'll see you at the investing at the same time, hopefully on time, because today we were a little early. Hopefully we'll be on time next week as well. Have a great day, everybody. And thank you for watching. Bye-bye.
Hi, everybody.
Thank you. Bye.
Thank you, ladies. Bye-bye.